Thanks for clicking. Canada's real estate market could tighten up after the Bank of Canada's most recent rate cut on Wednesday. This according to a number of experts in the media since that rate cut announcement. And if that sounds familiar, it should. We've heard that a lot, an awful lot, over the past year.
Everybody.
And that's why it's a little ridiculous to see the media pushing that narrative once again. One that, as we'll see, has before and continues to do so now, ignore the facts on the ground. So what I want to do today is go over the media and the industry's narrative since the Bank of Canada started cutting rates in June of 2024. Take a look at exactly why that narrative was ridiculous on its face over the past year, and as such the conclusions didn't play out, and then go over some implications. As we'll see today, there are a lot of obstacles in place to Canada's real estate market taking off despite this most recent cut from the central bank. We will obviously continue to track how this all plays out on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into the media. On to the Bank of Canada's interest rate cuts in the real estate market, with the first central bank cut occurring on June 5th, 2024, when the bank dropped rates by 25 basis points, bringing the policy rate down to 4.75. At that time, Toronto's benchmark price was sitting at $1,110,000, and if you listen to the media, there wasn't that much time before the market took off.
I do think it will stimulate the housing market.
Cut will allow more Canadians to qualify and is an indicator of things to come.
There's a limited supply of housing and an increased pent-up demand, which is going to only increase when rates start dropping.
And that media gambit had followed months and months of polls indicating that the minute the bank cut rates, everyone was flooding back into the market. And of course that didn't happen. As I had noted in the lead up to that cut, there was any number of flaws with those polls that were being pushed, and while the central bank may have cut, fixed rates were still pretty elevated. Fast forward to that second cut, we get another 25 basis points, bringing the policy rate down to 4.5, and by that time that benchmark price had dropped $13,000. That was right around the time that we started speaking on this channel about the possibility of a Trump election and what those tariffs would mean for Canada's real estate market. The United States to impose a 10% across the board tariff. That would lead to a 3.6% decline. Fear not though, even with the Trump possibility, that 25 basis point cut in hand, the time was ripe for an awesome buying opportunity.
If you are a qualified buyer, right now is an awesome opportunity for you.
And we anticipate a slow and steady return of buyer confidence and buyers to the market.
Except, as we covered on this channel, rates weren't really down all that much, with bond yields still sitting at 3% and a decent 5-year fix from RBC sitting at 5% in August.
It's awesome.
And it showed. By the time we got to that September 4th rate cut, another 25 basis points, Toronto's benchmark had fallen to 1,068,700, meaning had you have listened to those June experts and ran out and bought ahead of the big real estate takeoff, you'd now be down about $40,000 in 3 months' time. Don't worry though, that September cut, that's the one that's going to do it.
Housing market is expected to see a shift, spurred by 3 breaks on the interest rate this summer from the Bank of Canada.
They're showing that more buyers are entering the market, Natasha. Everyone seems to be encouraged with lower interest rates and the potential of more drops to come.
People have been waiting for the rate drop for a while.
Well, maybe, but variable rates were still fairly high, and fixed mortgage rates and bond yields were still elevated as well. Actually, they're exactly where they are right now. Remember that the next time the experts tell you that now's the time because interest rates are down. Fixed rates are where they were last year. So let's move on to that October cut, the big one, 50 basis points. By that point in time, the benchmark had fallen by another $8,000, so those June buyers that rushed right in, down by a full $50,000 in 4 months. Now, that 50 basis point cut in October happened on October 23rd, right when the presidential race was too close to call. And remember, this wasn't going to be Trump 1.0. This isn't the first time around. We all knew what to expect. We spoke about it in July. And this time, it was probably going to be worse, as this time he has experience. He knows what he's doing this time around. No one, 0 people, can be surprised if this doesn't go well, except for maybe the perpetually dumbfounded.
This is great news for a lot of mortgage holders and prospective mortgage holders right now.
The real estate market, no doubt, could see a bounce back now that maybe it'll be a little more affordable to get.
So the quarter points were okay, but now that we have a half a point, now we need another half a point. And acceleration does build consumer confidence.
This generates a lot of excitement and frenzy in the environment for purchasing. So we are likely to see a lot more people start going out and looking for those homes.
And yeah, after all of that narrative, we kind of move right along in November with the powers that be, the real estate boards, telling us how amazing the market is doing now that rates are down. I was continuing to point out on this channel that rates weren't really down and that sales weren't that great either, with November seeing the third worst sales in the past 12 years. And this market takeoff wasn't really showing up in prices either, with the benchmark up $200 in 2 months. Small comfort to those June buyers that saw their equity drop by $50,000. But then we get another big drop on December 11th, another 50 basis points from the Bank of Canada. And this 50 basis point drop comes with an explicit warning from the central bank that the new Trump administration could in fact impose tariffs.
What was I supposed to know?
And given that very real possibility of tariffs coming down the pike, remember Trudeau at this point had already ran down to Mar-a-Lago. The media in the real estate industry, of course, out of genuine concern for the consumer, ignored it.
Interest rates being lower than they have been in the last 6 months, that's definitely going to stoke the market a little bit and then make it unaffordable again for those same first-time home buyers.
We're already seeing housing markets starting to heat up in the Toronto area.
And then, of course, by the January cut, we hadn't really seen a takeoff. Prices had moved up by about $8,000. Fixed rates weren't all that great, with yields still sitting at 3%. The trade war was heating up, and by the time we got our January cut, it included even more explicit warnings about this trade war. And as such, on that rate cut, a measured response from Canada's media and its real estate industry, truly looking out for the interests of the consumer.
Pent-up demand that this country has had with the last couple of years or so with the lack of supply and not knowing what was happening with interest rates, seeing the interest rates come down has sparked that confidence again.
We do have a very real estate heavy economy, so presumably rate cuts will spur some kind of a revival in that sector.
This is good timing to help push against some of the negative influences. So I don't...
Truly looking out for the interests of the consumer when we're at the early stages of a trade war with the global hegemon. And then, much to the shock of no one with a GED, with the trade war in full swing, counter tariffs in place, the market had yet to take off by March's cut, with Toronto's benchmark price sitting at $1,068,000, still down about $40,000 from June. Then the Bank of Canada cuts one more time before a long pause, and, well, we know where this is going.
The most recent rate cut could spark more activity in the local real estate market. Lower rates could see more current homeowners looking to buy a new home.
And then, of course, the market did not take off. Toronto's benchmark price dropped $100,000 since those comments were made, even though there were any number of experts since March telling us the market was about to take off. So we've got the CBC, Financial Post, Global News, CP24, Bloomberg, all having experts on their shows, all telling us time and time and time again that a market boom is just around the corner. Well, maybe since this study started, Bloomberg had an expert on right before the peak telling us that interest rate hikes weren't going to do anything to prices. It's now down about $500,000 adjusted for inflation.
Oh, I am sorry, Master.
And this study was very much just scratching the surface. When I was searching for these videos, I searched for any commentary on video 5 days after each Bank of Canada rate announcement and didn't include anything from social media.
For the housing market, this could actually end up being a shot in the arm, a stimulus.
As I more just wanted to show the conventional media's role in trying to promote a fear of missing out. And those reports that we discussed today didn't even include the one from CBC back in March, 2 weeks before Liberation Day, telling us it could be a perfect time to buy. That video had over 350,000 views. You get that kind of support from Canada's national broadcaster and you still can't sell a house?
Well, I wake up in the morning, excellent.
And the study also didn't include that video from Peggy Hill a few weeks prior to that, who said that the market hadn't taken off because it was snowing in Canada.
We also have had a ton of snow, and it wasn't just us.
And even if this FOMO generation from the media wasn't purposeful, glaringly obvious facts continue to be ignored. Be it that fixed rates were still relatively high every time those videos came out. They're still relatively high now, exactly where they were a year ago. Be it that a Trump presidency would likely be very bad for Canada, a possibility discussed on this channel back in July. The warnings were very much there, and the media in the industry acted like they weren't obvious.
It always works.
And the point of this video is that they're continuing to do so now. They started well over a year ago and haven't stopped one bit. The economy is in rough shape and continuing to worsen. Housing supply is massive amid the renewal wave. We have free trade negotiations coming up next year. Fixed rates are still as high as they were a year ago when the market didn't take off, and defaults are continuing to rise at a rapid pace, etc., etc., etc. And yet the media and the industry continue to ignore these very, very real possibilities, these very glaringly obvious obstacles to that real estate takeoff. You can continue to ignore the data if you want, but you can and will, as we've seen, continue to be wrong. The problem is, though, I think, is that they don't care if they're wrong. They're not really out for you or for I. They're not in the business of being right. They're in the business of advertising dollars. Meaning the raison d'etre for this entire trip down memory lane: do not trust the experts that you see on media, social or conventional, as they've been wrong time and time and time and time and time and time again for at least the past year. They were wrong in the face of obvious facts. They told us the market was taking off in December when obviously Toronto's market really was not. As such, the best time for you to buy is when you're ready to buy. If you find the house and it fits the budget, you like the payments, it's affordable, your job is relatively safe from the tariffs, and I stress that very, very much, then maybe it's worth considering buying. If it's not, then don't. That should have been the narrative coming from the media and the industry for the last however many years. It has been on this channel and will continue to be so. With that said, who knows, maybe an extra 25 basis points in floating rate cuts will entice some buyers to jump into the market. We will obviously continue to track if that happens on this channel. Make sure you click like and subscribe to get those updates, but for now, thanks so much for watching.